Hello, everybody, and welcome to this episode of Derek Invest. I'm your host, Derek Miller. I'm not as shaved as I usually am, and I'll tell you why. I live in a hot place, a desert, and my air conditioning broke. So it's been a fun 5 days, which is also why I didn't do any live broadcasts yesterday or the day before. But I'm back. And we don't have the air conditioning fixed. Apparently, the whole unit needs replaced, and so we have a portable AC, which is doing what it can. But we're all happy and having fun and living in one room basically because a portable AC, it can't cool a house, but it can get a room pretty decent. Anyway, you don't need to hear all about that. What do I want to talk about today? So I always talk when I'm on here, and I talk about market structure. And I think sometimes people misinterpret what market structure is. So the market, I look at the market as a whole, right? The market contains three US indices, okay? It contains the Dow, the S&P 500, and the NASDAQ for all intensive purposes. I know it also is the Russell 2000. And by the way, you can break a lot of this stuff down. But the three major indexes that we look at when we're trying to determine market structure are the Dow Jones, the S&P 500, and the NASDAQ. Now, why do we do that? Well, the NASDAQ is tech heavy, right? And so tech is really leading everything. Like in every way, it's leading economies, it's leading companies, it's leading the stock market, it's leading global expansion. Tech is leading everything. The NASDAQ, the S&P 500 is the 500 largest companies around the world, all traded on that index, and then the Dow Jones Industrial is the 30 major industrial companies around the globe. And the Dow's interesting because a lot of people don't talk about this, but the Dow will typically be a laggard. Nowadays, it's going to be a laggard to the other two indexes very, very consistently. And the reason for that is that the Dow is, and I'm going to have so many people disagree with me about this, but the Dow is much easier to manipulate and move around. And so if the NASDAQ's having a hard time or the S&P's having a hard time, can always shove the good old Dow up a little bit and make a headline here or there. And I know I'm gonna get comments about saying that, right? But it is what I've experienced for 25 years. When those indexes start to fall off, usually I'll start if the goal is to hold up the stock market indexes, I'll start to see articles about the Dow and how it hit a new high or whatever it is. And so those three indexes are really important. What does their market structure do for us? Well, for one, if you have a leading index, and then so we have three indexes. So you're going to have a leader, you're going to have some guy play in the middle, and then you're going to have the guy in the back. And of course, I'm talking about an uptrend in price. Well, if you start to notice that your leader, whatever the leading index is, rolls over to be followed by that middle index, and then not yet, but going to be followed by that lagging index, what you're seeing is you are in fact seeing what could lead to a pretty serious recession. This will also help you to guide bounces such as today, right? So I'm in a few groups, trading groups. I don't talk a lot in them because I don't have a lot of time to talk. I'm going to attempt to participate a bit more, and I want to throw in my 2 cents. It's just difficult, though. It's difficult because if I'm trading, I can be actively taking care of my kids. Like I can be helping them do things, and I'm not just sitting in front of 6 screens. I trade on a laptop. I don't have a problem with it. And so the reason market structure came into play is I have found myself lately looking at market structure as ways to define my targets. Reason being, the leading index, which is the NASDAQ, really, if it develops gaps, and then the S&P's following the NASDAQ, I'll give it away, and then the Dow's coming up, pulling up the rear as far as an uptrend goes. But once the NASDAQ hits its targets, so on an uptrend, because the NASDAQ's leading the uptrend, the strength in the downtrend is actually the Dow. So when the NASDAQ is hitting its targets, if the market is falling, the strength is actually the Dow. So strength can flip. The strength right now in an uptrend is the NASDAQ. The strength right now in a downtrend is the Dow. We're going to now jump on the charts. I'm going to explain what I mean to you. And I'm also, it'll help to explain, I think, I'm watching a lot of guys, especially in one of the groups I'm in, they do a lot of the S&P 500, which is great, and I love it. And they're all really smart. And listen, I want to give a shout out to anybody out there that is trading, whether it's professionally, whether it's for yourself. I mean, kudos to anybody who has the stones to do it. I would never, ever knock another trader or how they do it. And sometimes I feel like, well, I should add in my 2 cents, but about like how I feel. And then a kid will scream at me and I end up getting breakfast. But anyway, I see a lot of people struggling with the S&P targets right now. And they're struggling because not because they may not know the targets or the targets aren't being hit. The timing is throwing them off. And the funny thing right now is what you need to pay attention to because we're in a downtrend is when the Dow is hitting its targets. So we had some coinciding gaps with the NASDAQ, the S&P, and the Dow. And this is in the downtrend. And, you know, as luck would have it, everybody's looking at the gaps in their chart. I mean, I can see what they're looking at. Maybe they're reading it as like, you know, the Greeks or wherever. It doesn't matter because we're looking at the same thing. I just look at it through a different lens, and you look at it through your lens. But they're pulling these targets up, and they're wondering why they're not getting hit, or if they're going to make it there, or are they going to make it here? And the truth is, because this downtrend is actually the strength in the downtrend is the Dow. I'm going to show you, there was an open gap today sitting down there. The Dow hadn't filled it yet. The NASDAQ did and the S&P did, but guess what? They're not the strength in down moves. The Dow is. Therefore, those two are actually subject to the Dow's reversals in a downtrend, whereas in an uptrend, the Dow is subject to the NASDAQ and the S&P. Let me show you. Let's jump over to some charts, and I'll do a little explaining. And hopefully it's a little clear when I show you the visuals, and hopefully this interests you and helps you, because that's my goal. Let's see here. Do I not? No, I don't. Hold on 1 second. Let me jump right over here. Pull this up. All right. So let's go ahead and go to QQQ. Boop, boop. There we go. All right, let me erase these drawings that I have on here. Sorry, everybody. I don't want to throw you off with what I'm doing. There we go. So let's look at the NASDAQ. Okay. So I'm going to share this screen with you now. I know you've been looking at me the whole time. Let's share the screen with you. All right, here we go. So this is what I mean when I talk about the leading index. The index is kind of following up, so that middle index, and then the lagging index. What the heck's going on here? I don't know why this is doing this. I didn't reset this thing. Whoop. Yeah, but where's the... This is so odd. Why is this doing this? I'm not sure why this is reset like this. Hold on, I'm sorry. Let me, this is the deal with lives. Things get messed up, and I am not sure why. Where's my computers? No, there we go. We're back. Okay. So this is what I mean by the leader. All right. Let's go here. I guess I can just add them to this screen. Let's see what it looks like. If it doesn't look, if I don't like the way it looks, I'm going to do something else. Okay. And I don't like the way it looks. That looks terrible. Okay. So we're going to just walk through these then because I don't like the way that looks. So if we look at the NASDAQ peaked on, doesn't matter which one of these days you're looking at. Let's just call it July 11th for argument's sake. NASDAQ drops into August 5th. It rallies up, comes nowhere near the high, and now it's fallen. And it's fallen back, into this low territory, okay? Like it's kind of the... Just call that a support level. it falls into this support level here, and it begins to rally. Okay, so drops, rallies. It starts dropping on July 11th. Drops, rallies, nowhere near the high. Drops into the support area down here, and then rallies again. Let's take a look at the S&P 500. All right, S&P 500. That same bar doesn't happen. The drop doesn't start till the 16th. Okay, so 5 days later, market drops, S&P drops, rallies back to the high. And on this pull down, what we experienced today, we're nowhere near down here in this support level. So that's about 530 on SPY. So you can see that the S&P is absolutely stronger than NASDAQ when it comes to the reversal. The reversal was not as deep. The rally is much, much stronger. The correction is far less deep again. And then the rally, I mean, you're already into this. You're already approaching the highs in the S&P. And I'm sure everybody knows the level of 555 that you should be looking at if you're trading that SPY or if you're trading the futures. Now let's look at the Dow. Here's the Dow. The Dow made its high on August 30th. Okay, so the NASDAQ made its high on the 11th. The S&P made its high on the 16th. The Dow made its high on August 30th. So after the August 5th drop, the Dow has already made a new high. And it retraced far less deep than even the S&P 500. In fact, the very beginning of that initial drop. So right now, your leader is actually the Dow. Now, is that a good thing? Well, if you're looking for a strong market, meaning to rally hard and go higher, the Dow isn't going to do it, everybody. I'm sorry to tell you that the Dow's not going to do that. This is actually, I mean, this is bad news. I don't care which way you cut it. If you're looking for markets to go higher, this is not good news. This is showing that the NASDAQ is weaker than the S&P, which is weaker than the Dow. Your Dow is your leader. And what did I talk about at the beginning of this? What I've noticed in my days over the last 25 years is when the Dow starts getting headlines about breaking new highs, you should start getting nervous. Now, the nice thing about the Dow is you're not being punished if you're in there trading Dow futures. It's far easier. Now, why? Well, we were talking about how the NASDAQ was the leader. Now we've entered into this correctionary cycle that we're going through right now, where people will say, the market's trying to find legs. It doesn't know which direction to go, blah, blah, blah. This is quite clearly a very correction. This is a correction. We're in a correctionary cycle, and in this correctionary cycle, the Dow is leading the way. Now, if we were looking when the market was strong and very bullish, right? So if we're back here before July 11th, if we're previous to July 11th, we're going to look at all the gaps in the NASDAQ, and we're going to say when the NASDAQ fills those, we know we're safe to go. We know that's a good market. We know right? Because the NASDAQ's the leader. Then you're going to look to the S&P for confirmation that we're all good, right? That's the way that's going to work. Now, when you move into a correctionary cycle, and now the Dow is actually your leader, it is now your guiding light. You need to be watching your Dow, and this is what I mean by that. So we're going to go into the ETF, and let's go ahead and take a look at we're going to have to look at dates, because remember, the Dow has already made a new high. It's the S&P and the NASDAQ that haven't made a new high. So the Dow has a gap on, what's the date there? August 14th, okay? Where it went from like 401 to 404, something like that. And it never filled. Now, let's see if there are similar gaps in the S&P. S&P, yes. S&P is the August the 14th. Let's go over the NASDAQ. Now, remember, we're looking at a daily chart and we're looking at indexes, everybody. If you're looking at indexes on a daily chart and you see a gap, which all three indexes contain, that gap is going to have to fill. All right? Now, when does it fill? Well, let's take a look. If you take a look at the NASDAQ filled that gap on September 3rd. Now, if we were in this bull cycle and this July 11th to August 5th hadn't occurred, the S&P and the Dow wouldn't be as much of a concern. Perhaps the S&P. We probably want to have the S&P fill as well. Now let's see when the S&P did that. The S&P did that on. Did it do it there? No, it took till September 6th. It took until Friday to fill the gap. So a lot of people, I think, thought that, hey, like, we're in the clear. The NASDAQ has filled its gap. The S&P has filled its gap. But guess what? Your leader, your strength, the index making the current new highs. That's your leader. I can't stress that enough. I don't care who's leading the charge over the year. That's not how this works, because this could turn into a giant bear market. We don't know yet. But what we do know is how to trade it, because we have the gap on the 14th. And guess what? The Dow didn't fill it till today. So if you weren't still looking to the downside, however you do that, right? There was one piece of evidence glaring at you in the face as to what target you should be looking at. Now, why is that important right now? Why does that matter? Because right now in the S&P, I think it's for me, it's 555. If I go over to SPX, it's like, or maybe it's even 560. I can't remember. The low right here. The low right there is 55.60. And I'm not a greedy man, so for me, that'd be 55.55 on the S&P. And we hit it today. And then we go over to the NASDAQ. I just don't remember. I'm sorry, I don't remember the levels. It's right here. It's the low here. As you can see, not nearly as high as that one. So on the NASDAQ, the low is 19,221, right? So call it 19,220, call it 1919, whatever you want. We hit it. That's all you need to know. So we have now hit what should be resistance for the S&P and what should be resistance for the NASDAQ. And on this run up, if in fact it's over and we are moving into a bull market, we now need to scoot back over and we need to watch the NASDAQ on a run up. We have now filled all the gaps from the initial pop. So if that was a dead cat bounce, for example, if August 5th through whatever that date is, August 22nd was a dead cat bounce, right now, who is going to tell us that? Who will tell us first? The NASDAQ will tell us first. The S&P 500 will tell us first. Then the Dow will tell us. Because the Dow is not in the same position. It is approaching new highs. Now, it did have a little resistance at whatever the low is, 40,850. It popped through there today. It's now 40,975, which really means that what would be resistance now is non-existent, and the Dow can go to new highs again. So even as the NASDAQ is trying to rally back to its highs, and the S&P is trying to rally back to its high, the Dow can actually rally to new highs, right? I hope that makes sense. I hope that what I'm saying is making sense and that it's doesn't sound like gibberish, because that, if you can understand how these structures develop and evolve, you are constantly pivoting. Whereas, like, if you solely focus on the S&P, or you solely focus on the NASDAQ, you solely focus on oil, or you solely focus on the Dow, what you're missing is how to adjust your targets and time frames. Because if you just sit and look at the S&P 500 or the NASDAQ or just the Dow all the time, I mean, if you only look at the Dow, well, guess what? You're going to miss a monstrous NASDAQ move once the NASDAQ breaks to new highs. Right now, I wouldn't play the NASDAQ or the S&P 500 because they're not the strength. The strength is the Dow, which means it's going to be consistent. If there's a gap, it's going to fill. If it pops to new highs, it's going to pull the NASDAQ. While on paper, if you look at today, you go, oh, well, the Dow, what did it do? 25 bips? I mean, it did like nothing. What did it do? Yeah, 25 bips. So the Dow only did 25 bips today. The NASDAQ did nearly 2%, if not 2%. Oh, 2.17%. But guess what? It's not even back to its highs yet. So right now, for me, I am always eliminating risk. I want to keep myself as risk averse as possible. I want to make the ride as smooth as I can, and I want my targets to be very calculable. Like, I want to be able to calculate, where is this going? When is it going? How smooth is it going there? And right now, the way to do that is the Dow. And I was inspired today because I kept clicking through all three charts, because right now when I'm trying to figure out when to buy, when to sell, when should I hold, how long do I let this run, I have to look at all three. I have to know that did the NASDAQ, is the NASDAQ approaching, like today, for example, on the Qs, 469? Is it approaching 469? On SPY, is it approaching 555, which is actually 560 is the real support, it's resistance now. That's a resistance level, by the way. 469 resistance. 560, which I would go 555. Did it ding it? Did it ding it? Did it ding it? Because once it does, if those two things get drugged down, guess what? It's going to pull on the Dow no matter what. And we hit those numbers close. So it's going to be an interesting open tomorrow. I really hope that that you enjoyed that. Wait, did I share that? Have you seen that screen? Wait a minute. Oh, no. I didn't share the screen. Ready? We're going to do, if you stuck with me as I talked through all that, I'm going to show it real quickly. I cannot believe I did that. I may have to go edit this one. I may edit this video or tell you where to skip to. Okay, so here's market structure. NASDAQ, July 11th. Drops into August 5th. Up here to what? That's the 22nd. August 22nd. Nowhere near the new highs. Drops into today. SPY, the S&P 500. Drops. Doesn't start till July 16th. Drops into August 5th. Rallies to a new high. Pulls into today. It's kind of in its previous high structure. But it hasn't made a new high. Whoop. The Dow started pulling down. I mean, you could say July 18th, I guess. Started pulling down July 18th into August 5th. Rallies to a new high. Pulls into today. We're going to zoom in so I can show you the gap I was talking about. Let's do a day. Okay. Gap. Look, here's your gap right here. This on August 14th. Okay. Did not fill until today. The market right now, right? It has made the new high. The S&P is not. The NASDAQ is not. Let's go over. I'm going to show you the S&Ps. It's all on August 14th, everybody. If you want to look at the date yourself, and you're unsure if what I'm saying is accurate, feel free to go look. There's August 14th on the S&P. It did not fill until last Friday. Let's go over to the NASDAQ. Right here. Here's your August 14th. It filled, I don't know, a long time ago. September 3rd, it filled. Why did the Dow have to fill the gap before these three markets could roll forward? Simple. The Dow's your leader. The leader will determine when the market gets to do what it wants to do. I don't care if it is the Dow or not. I have watched this consistently over 25 years. I have seen it happen over and over and over. I use it every single time, and it has never failed me. So, that's it's up to you to take the advice or not to. I'm going to cruise back over. I am so sorry that I was not recording those charts the whole time I was talking, but I gave you the dates. I showed you what to look at, so you can go back and take a look at that. I hope you enjoyed what we went through today. I am going to potentially have another mentorship going on in September. It would start probably the 3rd, maybe the 4th week of September. If you're interested, email me at dmiller@prometheainvesting.com. Leave your name, number, and email address. I also do one-on-one coaching. I'm going to go through market structure with my students for sure this week that I do one-on-ones with. I prefer one-on-ones. I help you establish your rules for trading, your risk, your way of trading, as a matter of fact. I'll expose you to anything that you want to be exposed to. I'll show you my system and how I do what I do, but I'll help you establish something that really works. For example, a lot of people think they want to trade the Dow futures or the micros or whatever, and they find it's too slow. They try to jump over the NASDAQ, and they feel like they're going to have a heart attack. And so maybe the S&P is for you. If you're dealing with a small account, I don't know how you do anything but the Dow futures. If you're dealing with a large account and you don't mind swings, you're going to head over the S&P or the NASDAQ. If it were me, I'd be in the NASDAQ simply because the NASDAQ has more volatility and wider swings, which is great for trading. But a lot of this stuff you won't know if somebody doesn't help you set it up and establish it. And sometimes you think you know your risk tolerance, but believe me, you don't know your risk tolerance until your feet are the fire. So your account is cut in half in a single day, and you work those orders, you work that chart, and you grind your way back. And maybe you turn into a positive day, maybe you lose a little bit, but you don't quit and you stay and you're centered and focused. Until that happens to you, you won't know. But somebody who's been doing it for 25 years can help you along that path just by monitoring your reactions. See how do you respond to certain stimuli? What does it do to you? Again, I don't really advise anybody jumping directly into futures or options. That's big wave surfing. You should learn in the small waves first, right? So I teach from the stock market because the stock market's smaller waves. It takes longer to move. You have a much bigger heads up as to what's coming. And then you can use some of that other stuff to hedge because you can hedge really cheaply. Anyway, I hope you enjoyed today. Remember, if you're not good up here, you're not good anywhere, my friend. If you're having a tough day, get outside, see the sun. If the market's been attacking you, or your mind is really probably what's been attacking you, make sure you get out there. I swear. Put a stupid grin on your face for an hour. Put it up. It'll work. You'll feel better. You really, really will. Go for a walk. All right. Life is good. You're batting 1,000. You've never lost. You've never lost. How do I know that? Because you're still here. You're watching and you're in the fight. And as always, remember, every day above ground's a good day. I'll see you all soon.